Let's hone into market activity on the East Coast, specifically taking a look at the NSE's performance over in Kenya. On Friday, we had the main NSE 20 share index falling back 1.2% by the close. As you can see, they're ending the session just above 4,774 points, extending its losing streak to a third straight session, taking losses to 4.3% ever since the bourse surged 7% in the first two sessions after the election results were announced. For now, we've got investors waiting for Prime Minister Ronald Lugalia to file a Supreme Court petition contesting the presidential poll outcome. So in the meantime, what we're looking at here are investors taking profit on the rally while bidding levels remain weak, pulling most stocks off their recent highs. When it comes to companies in the spotlight, looking at the two stocks that were the most traded during Friday's session, Equity Bank, one of them, the country's biggest bank by customers, it dropped back 3.2% by the close to 30 shillings per share, while leading telecom service provider Safaricom fell back 2.4% to 6 shillings 15. On the currency front, the Kenyan shilling weakened, hurt by greater corporate demand for the dollar. We have the unit coming into this morning at 85.65 to the greenback, so holding pretty steady, with traders saying they expect the shilling to trade in the 85.20 to 85.80 range in the coming sessions, noting that investors were waiting for the outcome of that presidential election result petition, which has challenged Uhuru Kenyatta's win in a tightly fought election on March the 4th. So that the kind of tone that we're opening up a trade to in Kenya this morning. Joining us for some analysis of the markets now is Ronald Lugalia, who's the investment analyst at AIB Capital. Thanks so much, Ronald, for joining us this morning. Let's get straight into where your sentiment's sitting right now. It seems that there's lots of nervousness in the air at this stage of the game. Are you nervous? To what extent?
Okay, at the moment, I would say that there is nervousness in the country. There's a few jitters here and there, but case or no case, we expect the market to move on. The bull run that now we've seen towards year to date till now is still there, despite the fact that now we had a correction toward the end of last week. We expect the same profit taking to happen at the beginning of this week, but moving forward, there is a strong underlying demand in the market. This one is the one that now is expected number to push the market going forward, because we expect, after the prices have bottomed down at the beginning of this week, going forward, we expect a comeback of investors who are going to invest based on fundamentals, because the growth options of this market are still strong. At an overall market PE of 12.24 at the close of last week, the market still has a big room to improve to close to 15 in this, given that number we have strong growth options going forward.
So as we see the markets take a bit of a breather, Ronald, as investors adopt a cautious approach, where are you seeing some of the opportunity?
Okay, the investors are there in the market, but what they're doing is resilient bidding, whereby they are taking hard positions on their buying orders. But once we see this litigation issue coming to an end, most likely you would see them coming back in the market. And once they come in the market, they will be looking at fundamentals which are being brought about by the expected robust economic development. So we are still optimistic that the bull run is going to go on, and investors, who both locals and foreigners, are still going to come in the market. At the moment, we still have speculative investors who are still in the market in the short term, but they are only here number to take advantage of the positive dividend that is brought about by the peaceful election. But going forward, we expect a robust economic development.
Let's get a bit stock specific, Ronald. Where are you seeing buying opportunity right now? What's sitting on your radar screen?
I would want to focus my attention on the pillars that have been set aside under the Vision 2030 in Kenya, which are going to grow the economy. First of all, I'm looking at construction, I'm looking at transport, and also some stocks now in the banking sector, because banking sector has been resilient during all the times, and most, given that number, our country has made bigger steps in the banking sector and the financial industry. We expect this number to take off. So I would expect investors to start positioning themselves in the banking sector, construction, energy and also telecom and transport.
Okay, let's hone in then on some of those companies. Equity Bank, as I said, the country's biggest bank by customers, on Friday's session, dropping back 3.2%. It's now hit the 30 shilling mark. Ronald, what's your view on a player like Equity Bank?
Okay, Equity Bank is still a big bank, given its strategy and strong management. Going forward, I still expect it not to have to attract investor interest. At 30 shillings, it is within its fair value. So I expect most investors who are going to come in right now will be basing their investment decisions based on the expected growth options, of which for Equity are strong, given that they have a great customer base. Their books look good in terms, their loan book is also strong, which is going to help them be able to attract investors outside there. It's also a company that now, when you look at its management, they've been able to come up now with strategies on how to woo investors, and their targeted clientele base, most likely the low to middle income earners and also SMEs, is where you'd want to think Equity is going to make a fortune going forward. Equity
certainly proving in the past to have the muscle to compete in what has become a very competitive environment. In the meantime, in the energy space, a sector that you've also got your eye on, Ronald, power distributor KPLC will have to wait a little longer, we hear, for the implementation of new electricity tariffs. Market reaction to that news filtering through?
That one was expected. The tariffs shall take a little bit longer, but when you look at KPLC, the fact that now we still have a great potential of supply and distribution of energy in this country, one would take it as a counter that number you want to invest in. With the current rural electrification program that's underway, and with the fact that now most of the energy companies, energy producing companies like Kenyan are increasing the capacity now to produce more energy, we see KPLC being able to take advantage of the situation and make good earnings going forward. The tariff bit, it could be an issue at the moment, but in the long term, you would expect its earnings to grow exponentially.
In the meantime, we've got the delay possibly hurting this company's profits, while a decision comes to the fore on the kind of rate hike it can implement and push through. We've got the high operating cost environment certainly working against the favor of a company like KPLC. What do you make of its own ability to rein in on those operating costs in what is a very high operating environment?
In an energy sector, a company, in an energy sector, we would expect the cost to be high, and which will press hard on the bottom line. And the margins within the energy sector are normally very minimal. So, a company like KPLC, you've seen they've come out now with ways of how to counter some of the power that has been used without paying. There are meters that are supposed to be installed. Some of them have already been installed now in some areas of this country. So those are some of the programs that now they have put in place to be able to curb the high cost that we've seen in the sector. So going forward, we expect them to be able to maintain the level in their earnings margin that has been, but as these meters start coming in, we expect them to be able to improve on their earnings.